Bitcoin's resurgence. A sign of things to come, Bitcoin is experiencing a resurgence. The digital gold has roared back to life, posting impressive gains and recapturing the attention of investors worldwide. This surge is not happening in a vacuum. It is intrinsically linked to the macroeconomic trends sweeping across the globe, particularly in the United States. As the world's largest economy grapples with inflation and recessionary fears, the Federal Reserve's monetary policy takes center stage. Bitcoin's recent price action has been nothing short of remarkable. The cryptocurrency has surged by over 10% in the last 24 hours, breaking through key resistance levels and signaling a potential trend reversal. This surge has pushed Bitcoin closer to the psychologically significant $30,000 mark, a level not seen since earlier this year. The question on everyone's mind is whether this is a temporary blip or the start of a sustained bull run. While predicting the future of cryptocurrencies is a fool's errand, understanding the underlying forces driving this rally is crucial. A rate cut anticipation, fueling the Bitcoin fire. The anticipation of rate cuts is like a shot of adrenaline for Bitcoin. It injects a dose of optimism into the market, attracting investors seeking to capitalize on the potential for significant returns. During previous periods of monetary easing, Bitcoin has responded favorably, often outperforming traditional assets. Following the COVID-19 pandemic, when central banks worldwide slashed interest rates and injected massive liquidity into the financial system, Bitcoin experienced an unprecedented surge. The global economy is facing a different set of challenges, from geopolitical tensions to persistent inflation. However, the underlying principle remains the same. Loose monetary policy tends to benefit risk assets like Bitcoin. Adding to the intrigue is the growing realization that inflation might be stickier than initially anticipated. This confluence of factors creates a fertile ground for Bitcoin to flourish. A rising tide. Bitcoin's impact on the crypto market. Bitcoin's resurgence is not an isolated event. It is having a ripple effect across the broader cryptocurrency market, lifting the fortunes of other digital assets. As the flagship cryptocurrency, Bitcoin often sets the tone for the entire market. When Bitcoin rises, other cryptocurrencies tend to follow suit, albeit often with greater volatility. Ethereum, the second largest cryptocurrency by market capitalization, has also witnessed a surge in price, mirroring Bitcoin's trajectory. This is not surprising, given Ethereum's growing importance in the decentralized finance, DeFi, and non-fungible token, NFT ecosystems. The correlation between Bitcoin and Ethereum's price movements highlights the interconnected nature of the cryptocurrency market. Smaller altcoins, often referred to as alt season, are also experiencing a revival. This surge in altcoin prices suggests that the appetite for risk is returning to the cryptocurrency market. ETFs and a weakening dollar, adding fuel to the flames. Adding further fuel to Bitcoin's fire are two significant developments: the launch of new Bitcoin ETFs in Australia, and a weakening US dollar. Australia's recent approval of Bitcoin ETFs has opened up new avenues for institutional and retail investors to gain exposure to the cryptocurrency market. ETFs offer a regulated and familiar way to invest in Bitcoin without directly owning the underlying asset. This is particularly appealing to institutional investors who may face restrictions or logistical hurdles in directly holding cryptocurrencies. The influx of institutional capital through these ETFs is injecting liquidity into the Bitcoin market, further driving up demand and prices. Meanwhile, the US dollar, often seen as a safe haven asset, is facing headwinds. A weaker dollar makes Bitcoin more attractive to international investors as it increases their purchasing power. This dynamic further fuels demand for Bitcoin, contributing to its price surge. As more countries explore and embrace crypto-friendly regulations, it paves the way for greater institutional adoption and further price appreciation.